Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Please like or subscribe to our videos as we have these posted daily, Monday through Thursday at 3:55. Now, let's jump into the information for the day. So we've had the inflation data report out this morning. Everything was cooler. We started gapping up basically off the news of Nvidia potentially selling chips back to China. That really pushed up the markets, but we had a mixed bag on bank earnings. Several banks did miss on earnings and or revenue, and then price got reduced on the stock market. There was one outlier. Citigroup did push higher today, but we're going to take a look at some of those stocks and show you the next levels that they're likely to hit. All right, so into the market summary. We've got the Dow Jones now down 0.88%, NASDAQ up 0.44%, S&P 500 down 0.3%, U.S. oil down 0.27%, gold down 0.4%, and then Bitcoin put in a mammoth daily topping tail yesterday, now down 2.75%. Incredible fall there on that cryptocurrency. If we look here at the S&P 500 heat map, we've got a lot of red, and mainly in the finance area. As I said, the one shining star was Citigroup right here, up 3.7%. But JP Morgan reported, you see they were down 0.97%. We had BlackRock also report they're down 5.64%. So overall, the bank and finance sector under pressure today. Health and technology, basically everything right up here, all under pressure. Tech is really keeping the markets afloat. But with Nvidia pushing up this much, it should rally the rest of the markets. And they're not doing that, folks. That is a major red flag that I'm waving up. It's showing that we're likely closer towards some top than we are as far as accelerating and pushing up. This great news on Nvidia should have pushed and lifted the markets up higher on the charts. And we're not seeing that all across the rest of the board. Next up, all right, the S&P 500. This is really truly displayed right here too, where we should have been gapping up like we did and moving higher up into the next resistance, but we didn't do that. We gapped up and nearly sold off most all of the day. If I zoom in here on the 10-minute chart, you can see that too. The selling pressure started right at the first tick of the opening bell and has since continued moving down towards the close that we have right now. So back to the daily chart, and we can see here price now is starting to get underneath this inclining trend line, all starting to show, even though this is consolidation, they're starting to show cracks in the market that we're likely starting to sell and go a little bit lower. Next major support at 59.42 on the chart. Next up, we've got the Qs. The Qs here, this is the index that really had the strength, as well as the SMH. And you can see here, we opened up above this inclining trend line, which is major resistance, and then sold off all day, much like on the SPY, just up here on the trend line and selling straight down. That is not a good sign when we have good news coming out about restrictions being lifted, selling chips over into China. That should lift a massive marketplace back open to companies like Nvidia and AMD and so forth. So this sort of sell-off news isn't necessarily the best. I would have anticipated a gap above this trend line and an accelerated push. We're not seeing that today. That, again, that's raising concern for me for forward momentum. If we're not going to be pushing higher off this good news, what's going to create that good news to be pushed higher, especially when bank stocks today are really slashing guidance. And a lot of companies are slashing guidance and the stocks are being hit, one of which is Wells Fargo. We're going to look at that a little bit later. Next up, we've got the SMH. Now, with this news on Nvidia, look what we did. We gapped over this resistance. Notice the last couple of days we were fighting to get into this parallel, but this is what can happen when you gap above resistance. The price can float and continue to move higher on the charts. That's a major significant change on this chart. We were starting to break down. Now we gapped up. Will this be the blow off top? Consider we're at all-time highs here on the SMH. Great move, by the way. But is this the blow off top? A gap up and sell off. We should be gapping up and pushing higher. We're gapping up and coming down ever so slightly on the charts, more exaggerated on the SPY and the QQQ. Next up, the IWM. Now, the IWM, see here on the daily chart, we had a significant drop down here today, down 1.96%, mainly because there's a lot of banks that are involved here in the Russell 2000. So that was understandable considering banks were under pressure, as we saw on the heat map. So price moved straight down today. I wanted to point out we have a 10-minute head and shoulders pattern here on the chart. You can see it defined by this inclining trend line right here for the neckline. We have a shoulder, a head, and then a right shoulder. And since has now break. The measured move for that is down here at 215.74. That's where my target for IWM is in the most immediate near term. Then we're going to have more significant support right here at 211.15. Next up, we've got Bitcoin. Now, I've been mentioned this to you guys yesterday about how we've had the potential for a topping tail as long as it closed down in this range at 8 o'clock last night. And exactly it did that, as you see here on the chart. Measured move was tagged and also topping tail here at the top of the chart. Incredible move up for Bitcoin, but this daily topping tail is a big bearish signal for near to midterm price action. I expect Bitcoin to trickle back down here to the 113.278 level. Then we can reevaluate if we do see a good bounce. It likely won't with this major topping tail, but still, you have to believe with this big epic run and hitting all brand new all-time highs, there's going to be retail investors that miss the boat. They're going to be willing and eager to step up to buy Bitcoin. So even though this is the first level of support, which typically gets broken through, there could be a lot of buyers waiting right here to capitalize on a return momentum back in for Bitcoin. So watch support at 113.278. Next up, we've got gold. Not too much to report here as we see we're really trading sideways on this chart here with gold. Support area at 32.42 and also measured move potential up to 36.21. Next up, we've got silver. Guys, this has been one of the best calls I've had this year, especially on this show. We've been talking about silver. What happens when we get into measured moves? We likely will have selling pressure. What happens when we get into measured moves plus a resistance trend line? We're almost guaranteed selling pressure. And that's what we got here on silver. So check this out. We got a daily topping tail formed yesterday after hitting that measured move and tagging this inclining trend line right here. It makes sense we have a pullback today. I think that pullback is not over with yet. First area of support is at $36.58. Notice all this chop here that should provide some buying opportunity and support in this zone. Next up, we've got U.S. oil still forming a bear flag on this chart. Price moved down just ever so slightly today. My target down here is this declining trend line for U.S. oil, which is currently right around $60.53 once we get a more of a curl over and drop on oil. Next up, nat gas actually tagged this minor resistance today formed by this declining trend line right here, and price got rejected. Good thing for it, though, it's closing up near the top end of price action today, which does imply we might actually poke through tomorrow. Next resistance is going to be up here at this next inclining trend line right around $3.97. Next up, this is honestly, guys, I think this is probably the biggest story of the day. And one of the reasons we're really not seeing a continued rally as tech has led this rally. Consider the AVGO, Netflix, all these other companies in the QQQ were really pushing higher on the charts, especially since the April low. But that all really kind of came to a halt today, even though there was good news out. Everything started retreating back and selling off basically at the open. And I think the major reason and the culprit for that cause is right here on the 10-year yield. You see today we did push up 1.04%. We're now at 4.483%. Notice too, if I zoom in a little bit further, this smaller declining trend line right here, that's the neckline of an inverse head and shoulders pattern with a measured move at 4.683. We've already broken out now, confirmed at that area. So let's see, that does show that probabilities dictate we're going to be moving higher on the charts. And guess what? JP and the FOMC, they do not have a scheduled cut coming this July. The next scheduled cut with odds is coming in September. So will this information of the 10-year yield pushing up change and alter their decision making for this month's FOMC? We'll see, but this ultimately is going to be putting pressure on the markets, especially if it continues moving higher to 4.683. Next up, we've got MP. MP surged today off the back of a new military contract. MP does mining and for rare earth metals and various other metals too. So they did excel off of that news, pushing up, as you see here, closing 20% up on the day. Nice move for it. If I zoom back out, you can see this is the all-time high. So we pierced all-time high, did not close above it though today. So with this big move of 20%, I anticipate some further selling pressure in the coming days. Even though it is good news, it's just a big move up and all considered in one day. First area support, $52.43. But I also want to highlight this was a daily topping tail. This is typical behavior. If we gap up over this resistance for an accelerated move up. We did not see that with some of the other chip stocks. We didn't see that in the SPY today. We didn't see that in the SMH. We didn't see accelerated movement, all of which why I keep banging that drum. This is raising flags, folks. We could be closer towards the end of this rally than beginning a new rally. All right, so into NVIDIA. So where is NVIDIA going to go? We are ultimately very extended on the charts. This news was great news for NVIDIA, but you see here, we actually closed lower than we opened. So again, reaffirming what I've been saying, we didn't push higher. We actually are closing lower than where we gapped up first thing this morning. So where does this take NVIDIA? If NVIDIA still continues with momentum, the next area of resistance is going to be the top end of this parallel, as you see displayed here on this chart, which is currently at 183.33. Considering that we're already overextended into this area, the likelihood is that we were probably going to start pulling back sooner rather than later and tagging this area of support, which you notice corresponds with this 50% area of the parallel and this inclining trend line right here. That support level is 158 and 66 cents. Be watching for a pullback there for support on NVIDIA. Next up, we've got TTD. Now, TTD also did accelerate higher, pushing above a gap today, but then sold off all day long. Now closing basically right on this longer term trend line. So that tells me there likely is more selling pressure ahead of TTD. Next area of support is going to be along this inclining trend line, currently right around $74 to $75. Notice how that lines up perfectly with a gap fill right here. Important to note, if we do start trading back above this trend line again is taken from the pivot low back here in April 19th of 2024, connected with this low pivot. And then notice how that provided resistance right here when price came back up. So this trend line is significant. If we stay and gap up above it, the next area of resistance is going to be this declining trend line, which then could provide a breakout opportunity for TTD, but not so fast. A lot of investors are snagging profits with this nice pop up. There could be a better opportunity to get in down here at the $75 range. Next up, BABA. BABA, this is like the Amazon of China. Look at this major move today. We've got pushed up over 8%, now getting trading action back inside of this wedge pattern that's displayed on the chart. Now, BABA has a lot of gaps, but again, this is another example of how a gap up above resistance is supposed to accelerate price action moving forward, as we didn't see with TTD and we didn't see with some of the other bank stocks. But anyway, this is still a great move for BABA, and I don't think it's over yet, folks. I think the next area of resistance will be tagged in the near to midterm right here with this declining trend line and just through it at 122.08. Next up, we've got IQ. Now, IQ is kind of like the Netflix of China. Now, if you will, look at this for a moment. We can go all the way back on the chart. Look at how low we are on the chart of IQ. Price of this stock was once over $45, and now we're now down near $1.86. This doesn't make much sense. If you look over at Netflix, where's Netflix? At the all-time highs. We're all the way up here at $1,200. So what's IQ doing all the way down here, especially when BABA's starting to make runs? That tells me we're about to have a big breakout on IQ. Look at this nice bull flag pattern that's forming here on the charts. Next area of resistance is this declining trend line at $2, basically $1.98. But notice over here, we've got an inverse head and shoulders pattern that's already triggered with a measured move up here to $2.13. That's the minimum area that I think we're going to be moving up on IQ. I think this is a great play once we do get price to break out of this declining trend line for a further extended move up on the chart of IQ. Could be big gains from this current level that we're at right now. All right, next up, SMCI. Now, SMCI did push higher, but this could have been foreshadowed by the pattern that's displayed on the chart. If you notice here from June 24th, the 3 candle bar surge up, and then we consolidated to the right. This is bullish consolidation, much like a bull flag. And a bull flags typically result in a breakout. And the measured move for this bull flag is up here at $55.92. That's going to be the next area of resistance on the chart of SMCI. And if you notice this parallel, the 50% area of the parallels, not much further beyond that, roughly about $58.50. So this zone is going to be pretty difficult for SMCI to get through, even though it's made very nice stair-step moves up and still could consolidate and then go higher. But on the first attempt, it will be very difficult to bust through this area with the 50% of the parallel and the measured move on the first attempt. Next up, we've got Ericsson. Now, Ericsson did report earnings today. You see here, they had a mixed bag of earnings, beat on EPS, but then missed on revenue. And then the stock just really plunged lower today, caught baby support, just very minor support here because it didn't quite actually tag this inclining trend line, but it kissed it and caught support to finish the day quite near the lows of the day. So that tells me we likely are going to actually pierce this area, but a move down this sharply. Notice the RSI, we're oversold in the near term. This area, as far as this inclining trend line, currently at 716, followed by the support area at $6.88. This zone should catch price on Ericsson and provide a nice technical relief bounce, probably up here to this declining trend line right around $7.59. Next up, we've got Wells Fargo. Now, Wells Fargo, they also reported earnings. They beat on both EPS and revenue, but look, the stock sold off today, down 5.48%. This is for a couple reasons. There weren't as much interest income, and then they also slashed revenue this year. This is something I've really been contemplating for this earnings season, thinking, what is it that's either going to propel the markets higher or what's going to send the markets back down a little bit lower? And thinking about it, the guidance being slashed is likely going to pull out investors, have them go ahead and hit the ring button, the cashier button, take their profits, and then get out of that trade. This is being displayed today on the Wells Fargo chart. Is this going to continue through this earnings season? Is this going to be the reason that we start selling off? The likelihood of tariffs coming back, increased costs, and then the unexpected outcome of some of these tariffs is causing companies to slash that guidance. So this is very critical to understand and important for investors. Don't like uncertainty. We don't like not knowing what's about to happen. So in those situations, we'll just get out of the stocks, much as like what's going on here on WFC. With the earnings beat and EPS beat, we should be seeing Wells Fargo push higher to this next resistance trend line, but not today. It came down, tagged this inclining trend line perfectly late in the afternoon, and did get a bounce up to finish here at 78.86. If selling pressure continues, which it would be hard to do with this being the collective third hit of this trend line, the next area of support is going to be down here at $74.19. Next up, we've got Citi. Now, Citi today, you see it opened here, and the power of Citi excelled through this resistance trend line, closing the day above this trend line at $90.72. We see here on earnings, they had a double beat as well, like Wells Fargo, but Citi pushed much higher, and they actually are going to be, they've listed they're doing buybacks, and they're also interested in creating their own stable coin. So that stirred up interest in investors and pushed the price higher. But one thing I want to show you, if we back out onto the weekly chart, look where we are on the chart of Citi. We are kind of like IQ. We're way down at the bottom of the charts right here, right? So a move up on Citi really kind of makes sense, especially considering, you know, the other banks are down, but the other banks are near their highs. So the logic does dictate that we should probably move up off of any little bit of good news with Citi. And the good news is that we beat on earnings. All right. So what we do here, though, we look on the weekly time frame and see what I've found. I've got a left shoulder, a head, and a right shoulder. These head and shoulders are all over the place now on charts. So it's an inverse head and shoulders that's actually already been negated with this price action on the weekly, but it can still give us a general idea where price can go if it does continue to move up and break above this inclining trend line. That measured move target is up here at $123. So it very well may not get there. The odds of it are about 60% since we did have this negative breach right here of the neckline. But all in all, that is and could still be a target there on the chart of Citi. All right, guys, thank you so much. This wraps up Trading the Close. Please like and subscribe. We'd love to have you guys join us every single day. I'll have more trade setups and info to you guys tomorrow. And tomorrow we've got retail sale, or later this week we'll have retail sales coming out, as well as housing permits and the Michigan consumer sentiment on Friday. All right, guys, have a great day, and I'll see you tomorrow. Take care.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.